Hi everybody, this is Yohay Elam. It's Friday. We're having the live market open in Europe on September 25th. I hope everybody's doing well. As always, we welcome your questions, remarks, anything, of course, Forex related. We're going to talk about what's going on in the market. It's been quite a roller coaster. Please put your questions in the chat. Let's first look at a bit at what's going on in the markets. The main theme that we have today, what we had last night, is Yellen. Yellen makes the case for a 2015 rate hike. So here is the euro-dollar chart. This is a complete reversal of what we had yesterday. So this is basically, that's a reaction to Yellen. Yellen made a strong case for raising the rates in 2015. She sees it's important to get out of the situation where we have zero interest rates. So that's why we have the dollar strengthening across the board. Now, let's see. Have any questions? No. Okay, so let's go back to what happened yesterday. I'll go back to the slide here. So yesterday we had the opposite move. We had the euro-dollar strengthening. Why did that happen? The ECB was in no rush for more QE. So first of all, we talked about this yesterday. Draghi said, yeah, we're considering, but we'll see. Basically said nothing new. And as you know, no news is good news for the euro, because the euro is basically bid. There's always a positive trade balance. So the euro went up. And then yesterday we had another member, a Lithuanian member of the ECB, and he said that also there's no rush. We'll only begin discussing more QE, more euro printing in December. So that also helped euro-dollar go up. So let's just take a look back at the chart. Euro-dollar has certainly been exciting. We're basically now back to the drawing board, 111.30, which I see as minor support. But we've been almost at 113 yesterday, so it's quite a rise and a fall. What else did we have yesterday that also moved markets against the US dollar at first? So we had the durable goods orders. These hurt the US dollar. It wasn't terrible, but we had figures that were, we had flat core orders. And what does that mean? It means that there's less investment, long-term investment, and that's, of course, a bad sign for the Fed. So this sort of exacerbated the fall of the US dollar across the board, and then in reaction to this, we saw euro-dollar reach towards 113. Later, we had new home sales that came better than expected. Let me look at the number to tell you exactly. No, I don't have that. It came out at 550, if I'm not mistaken. So when we had that strong figure, the US dollar didn't react at first. So you can always say the machines have an advantage on us. The algorithms read the data first and they react first. So you can't, as retail traders, we cannot react. But this is an example that is not the case. So we had US new home sales at 552,000, much better than 522 that was expected. And their immediate reaction was not so much. But in the hours following that, if you can see here, the mouse on the screen, in the hours after that, we had a better reaction. We had euro-dollar beginning to fall. We had the US dollar strengthening against other currencies. So this is this kind of fall from almost 113 to 112.20. And then at this point, when liquidity was thin, we talked about this yesterday, we had Yellen's speech. So what did Yellen say? She was a bit more hawkish than her statement in the rate decision. She says, first of all, she defied the criticism that the Fed reacts to the stock markets and said that they're basically ready to act. On inflation, she put more emphasis that the impact of oil is transitory, and this means that oil moves inflation lower, and it's only a small thing, and it doesn't impact long-term core inflation. Let me quote some more from what she said. She said that what's going on in markets, including China, does not significantly affect the policy path. This the path means that rates will rise this year. She said it a few times. Another small anecdote from her talk. Well, she didn't feel really well. At some point, she got stuck with her words. For markets, it didn't really matter because her speech was already released on schedule, and she was just reading out the speech. But it was some kind of scare. People in the audience, they were worried. Of course, we all wish her well, as the fresh reports that we have from the United States are that she was just a bit dehydrated, and she didn't even go to hospital, and she's A-okay. So maybe the US economy is not doing so well, but Yellen, at least, she's all right. Okay, so that's the biggest move in markets. Yellen makes the case for 2015 rate hike. Okay, let's see if we have any questions. Of course, questions are always welcome. What else happened towards this session? So next point here I have is the Japanese inflation is not going anywhere fast. Let's look at the economic calendar. Here it's the fixed rate calendar on Forex Crunch. We have figures from Japan. Some of them are core, some of them are what's called core. That means excluding fresh food. And some of them are the national CPI, which is for the month of August. And then we have the Tokyo CPI, which is for the month of September. But basically, if you look at the year-over-year figures, we have in the national CPI for August a drop of 0.1%. In core CPI, that's really off target. The Bank of Japan wants to reach 2% like all other central banks. In the Tokyo CPI, it's a bit better. Excluding food, I see 0.8. But it's still very far from the target. It's important to remember that the current governor of the Bank of Japan, Kuroda, is in office since April 2013, and his target was to reach inflation, 2% inflation in 2 years. Let's say we're not there yet. Okay, so this still implies perhaps more monetary stimulus in October. Remember the date, October 30th. That's the time to watch. Now let's see the impact on Japanese yen. Well, finally, we're seeing dollar-yen rise. We mentioned yesterday and the day beforehand that dollar-yen is sort of hugging the 120 level. I would be cautious not to call this a breakout so far. This is the hourly chart. We can see here the triangle, the pair, the trend line from around here, let's say. I don't usually use too many trend lines. I don't really believe in them, but just it'll give you some impression of what's going on. We had this squeeze, and now we can see maybe. So even if we look at this chart, it's still not a breakout. It's still a move upwards within the triangle, within the range. But maybe now people are talking more about a rate hike in the United States and more monetary stimulus in Japan. So this is another example of diverging monetary policies, hawkish in the United States, dovish in Japan. But it's also important to remember that the dollar-yen, it's a safe haven currency. The yen, sorry, is a safe haven currency. That means if we have more worrying news about China, the yen could strengthen. And so I would not call this a breakout just yet. But these two factors, Yellen's speech and inflation in Japan, are both pushing dollar-yen higher. Okay, so let's go to the next point now. Well, this is a bit less important at the moment. Goldman Sachs, it's the vampire squid, sometimes called. They have a lot of influence on markets, and they say that the RBA, the Reserve Bank of Australia, is a bit uneasy with growth. But this didn't have a significant impact on the Australian dollar. Let's look. Reconnect. So we have the Aussie dollar at 70 cents. Similar to dollar-yen, also the Aussie has its very round level and it's hugging it. So yesterday we had a big fall. We talked about it. An extension, commodity currencies were crushed. That's what happened until some point yesterday at noon. Then we had some kind of recovery. but this recovery is a bit shallow, and the battle over the 70 line is still raging, still going on. Okay, so now we are at 70 at 10. It does really matter where the pair closes this week. We did see a recovery, but it's still not that strong. So that's so far Goldman didn't have an impact, but I believe the general trend is indeed lower, and that Goldman has it right, Goldman Sachs. Okay, another small thing is that Caterpillar reported weakness. It's a huge US company. I'm talking again about one stock and not about Forex, because this is sort of a bellwether for global growth. And it comes back to what I said about the yen. If we have trouble in the whole world, the yen could strengthen. So be cautious about any breakout in dollar yen towards the upside. That's what we had yesterday. Let's move to today's events, or move on to the charts. Let's move to today's events. We just had monetary data out of Europe, out of the Eurozone. So let's take a look at what was published right now. Well, I think it was okay, more or less within expectations. M3 money supply 5.1 is expected. That's the amount of money in circulation. Basically, we have a situation of near deflation in Europe, or disinflation, doesn't matter how you call it. Prices aren't going fast. The ECB is missing its target. It's not the only central bank with this kind of trouble. But anyway, it did manage to pump more money into the system. It pumped more money using the negative deposit rate, low lending rate, and also printing euros, the QE program, 60 billion every month. So it did manage to enhance, to accelerate the money growth in the Eurozone, but it remained basically unchanged from last month. Another factor that they released is private loans. These rose by 1%. It's better than last month, 0.9, but a bit below expectations, 1.1. The goal of the central bank is to trigger more economic activity by having banks lend more money, by more credit, easy credit. So we had a negative situation just a few months ago, and the situation has improved. The ECB did have some kind of success here, but things are not going very fast. So that's what's going on. This is monetary data. Another figure, well, the year-over-year money supply, contrary to the 3 months, that rose also a bit less than expected, 4.8 instead of 5.3. That adds sort of to the weight on euro dollar. Let's take another look at euro dollar. Most of the fall came before the release of this data, so I don't think this data is that important. In general, it's mostly Yellen now driving the dollar higher and euro dollar lower. We have a question. Good morning, Jake. And we have a question from Imaki. I hope I'm not butchering the name. How much is today's US GDP implemented in euro dollar decline? That's a great question. And well, I'll be a good politician and say it's a great question when I don't have a clear answer. Well, let me look at the figures. So we have the big event of the day, as you mentioned, is the release of the final US GDP figure for Q2. We had first release was 2.2, if I'm not mistaken, and then the first division showed an upgrade to 3.7%. Now we're expecting only a confirmation, no change. So with no real expectations, I don't think US GDP is priced in. I think what Yellen said, Imaki, is more important. It's more hawkish. It has a positive impact on the dollar across the board. I think towards the release we'll have some tension, and then markets will react to the release. I don't think they're pricing in a stronger figure than expected. I think 3.7 is indeed expected. We have some examples where you have official expectations standing at one point, but then you have some whisper numbers, some people talking, some other figures that support a better figure, and then you can see, for instance, in this case, euro dollar falling, the dollar strengthening, just because people believe the number will be even better than expected. And then when you have the number out, and it doesn't really matter if it's good or bad, you might have the buy the rumor, sell the fact. So in this case, I don't think it's priced in because you don't have new data for Q2 to support a change in expectations. So I hope this answers the question. And you're welcome to ask more, of course. Let's look. So we covered, yeah, that's the big event of the day. It's at 12:30 GMT. It's a bit old at this moment. We're talking about Q2. Q2 ended almost 3 months ago. We're on today's September 25th, and we're talking about a quarter that ended in June. Of course, this is important because it's the overall figure for the US economy. But since then, we have much more data for Q3. Most importantly, jobs figures, inflation figures, retail sales, and purchasing managers indicators. So that's so it's not. I don't think it plays such a big role. If we have, I will say this: if we have a positive surprise, not just 0.1% higher, but talking about if we have a figure of 4% or more, it'll of course, I mean, another round number. It'll be very positive for the US dollar, especially as it comes just before the close. If we have a weaker figure of under 3%, for example, and big figure lower, 2.9 even, it'll be, of course, US dollar negative. Okay, let's go on and talk about other events that we have today. We have a speech by James Bullard of the St. Louis Fed at 1:15 GMT. James Bullard is a known hawk, or bullish Bullard, if you wish. So if he supports a case for raising the rates, it's no news. It'll have absolutely no impact because we know that he is a hawk. We know that he supports a stronger, a rate hike in the United States that will not strengthen the dollar. If he does surprise and say something about the lack of confidence regarding rates or anything along these kind of lines, then of course we'll have the dollar tumble, because if a hawk turns dovish, that's news. Okay, but he speaks a lot, so he needs to really surprise us to make a difference on markets. And then the final important figure, meaningful figure for today, is a 2 GMT, final US consumer sentiment by the University of Michigan. Let's look at expectations here on the calendar. So we have we had a figure of 85.7, which was then quite disappointing. We're expecting a small upgrade to 86.7. Let's mention, while we wait more questions, perhaps other indicators. We have the market services PMI. Market, this company which releases very important figures for Europe, for China, for the UK, these purchasing managers indices, PMIs, it doesn't have much impact in the United States. We have another company called ISM. They have much more impact. Nevertheless, if we have a big surprise there, it could still have an impact. So last month we had 56.1. This time we're expecting 55.6. It's basically the same. It reflects relatively solid growth. The 50-point line in PMIs in general separates growth from contraction. Okay, so if we have figures under 50, it's sort of bad news for the economy. Above 50, it's good news. But of course, there's a difference between just over or under. The final number matters and the trend matters. In this case, I think it'll have a relatively small impact because market has less weight in the United States. Okay, so these are all the figures. One last thing maybe for today. Esther George of the Federal Reserve, she speaks relatively, well, not that late. Yeah, no, it's 7:25 my time, so it's 5:25 GMT. Basically, markets are already moving away, and she's a known hawk, so, and she has a bit less impact. She's not a voting member this year, so I don't think it'll have an impact. So looking at the figures, the most important one is, of course, US GDP. to which you referred to, Imaki. That's the big event of the day. Okay. Now let's talk about more currencies. We didn't show enough charts today, did we? So let's move back to euro dollar. The levels I'm looking at, well, we're now at 111.22. That's just under 111.30, the level that I'm looking at, but more significant support is at 111. Well, we've seen that. Let me move that line. It's a bit more important because that's the low that we've seen this week. So here we are. To the upside, we have more levels. We have 111.50. Maybe that's, this chart is better. Yeah. Okay. A 30-minute chart. We have the 111.90. That's just under 112. 112.40, and of course the highs that we reached yesterday, 112.90. These are the levels I'm looking to the upside. To the downside, under 111, we have very close support at 110.80, and then of course the very round number of 110 is significant support. Okay, and let's move on to the pound. So we also had a nice roller coaster in pound dollar. We had it falling to, what's that, 151.60, something like that, and now we're at 152.20, sort of towards the lower end of the range. Pound dollar fell quite a lot. One of the reasons is that if the Fed doesn't hike, also the Bank of England, and Carney's boss is Yellen, if you wish. So, but now that we have perhaps more expectations for rate hike, I'm expecting the pound to recover a bit. It was hurt a bit too much. So maybe not so much against the US dollar, but more against the yen or the euro. So I think the pound was punished a bit too much. Okay, continue to dollar yen, which we spoke about. So we're seeing it tick a bit higher. Let's zoom out just a bit to look at those trend lines. All right, so as I've mentioned before, the break is still not confirmed. We can have bad news coming from someplace in the world and see the yen strengthening. That means dollar yen falling. If we do have a confirmation of this break, level I'm looking at is 121.90, just under 122. That's a bit far, but that I see that as important resistance. And then we have 123.50. To the downside, we have, of course, 120, which is the magnate. It's not really support. 119.80, well, just below that, and 119.40. More significant support is at 118.30, and then 117.90. And of course, the big level below is 115. Okay, moving on to dollar CAD. Yesterday we had a really nice break to the upside. We had a break to fresh 11-year lows. I mean, for dollar CAD, these are highs. So the Canadian dollar was beaten hard. It reached 134.20 or so. It's the lowest level since, it's the highest level for dollar CAD since 2004. So on the recent move higher, it didn't only break the cycle highs of 2015, not only the post-crisis highs of 2009, but also reached levels last seen at 2004. As we said also in previous shows, the Canadian dollar is fragile, vulnerable, if you wish. Each time we have a fall in the price of oil, we have a Canadian dollar falling, and when oil prices rise, the Canadian dollar doesn't really react to that. So now we're back. We had after Canadian dollar suffered, it managed to recover. We're now exactly 133.33. It's not only lots of threes, but also if you look at the inverse relation between the currencies, if you look at CAD, US dollar, that's exactly 75. So we use the convention of dollar CAD, but in some places they look at the other way. So just an anecdotal thing to look at. 133 is still a battle line. And below that we have 132.20, 131.70, And of course, the big level below is 130. We saw the pair bounce from this level early this week. On the top side, well, we're back to levels last seen quite some time ago. So I don't see 135 is of course a round number, and then 140, but it's sort of uncharted territory, if you wish. It's levels last seen in 2004. Hi Verdran, welcome all of you. Imaki, Jake, Tico, questions are welcome. Let's move on to the Aussie. We mentioned that before. Goldman was a bit bearish. So, well, since we began the show, it went up, well, some 9 pips. Basically, 70 is the key line. 70.60 is the line above. And the level, the post-Fed high was 72.70. On the downside, we have another round level below 70. It's 69. I still see Aussie dollar as bearish because of China, because of a slowing Australian economy, and of course because the Fed is about to raise rates. So I see this currency pair also as vulnerable as well, the Canadian dollar. Okay, New Zealand dollar. Here the situation is better. New Zealand exports agricultural products, contrary to Australia's copper and iron and more stuff for Chinese factories and homes. Currently, Kiwi dollar is just above support at 63.10. Further support is 63.40, and resistance much higher at 64.25. Also, in New Zealand, the central bank is about to cut rates once again in October, but it's not so certain. The RBNZ is a bit hesitating about this move, and in general, New Zealand is less fragile, less vulnerable to external shocks. Okay, so we have among the commodity currencies, if we rank them, perhaps the Kiwi dollar is the strongest. We find the Canadian dollar in the middle and Aussie dollar at the bottom, in my opinion, of course. Okay, let's talk about the other currency pairs. Dollar Swiss. Here we have it moving up. Well, we can thank or blame Yellen also for that. We are now at 98.30. The Swiss franc is influenced by interventions from the Swiss National Bank, so it's not always the best currency to trade. But we can see some kind of breakout here, breakout above 98.10, which was the peak seen last week. So it is going up. Support is at 96.60, and of course 95.20, which was the swing low last week, or this week? Last week, sorry. Okay, so of course the big level above is dollar Swiss parity. Okay, dollar Swiss. Let's move on to Euro Swiss, which matters more. Here we actually see 109.40. If I remember correctly, also yesterday we were talking exactly about this level. We see it moving in a more narrow range. Yeah, the Swiss franc trades more closely to the euro because it's the biggest trade partner. So as you can see, the move, it's in tandem, and the Swiss franc weakens much more against the US dollar. Again, the big story here is Janet Yellen, and that's why we don't see too much in Euro Swiss. But Euro Pound is a bit more interesting. Let's take a look at the 30-minute chart. Okay, here we do have some kind of a decline from the highs because with a more confident Fed, we might have a rate hike also in the UK, and we have the other kind of policy in the Eurozone. That doesn't mean the ECB is going to print more money, but basically it is in the process of printing money, while in the UK and in the US, we have the other direction. So we are now seeing what I pointed here at support. It's at just above, just at 73. Resistance 73.50, and then 74. On the downside, we have 72.35. Okay, the pair already traded under under 70 this year. Well, not that long ago. Currently, it's a bit stuck in this range. But for those of you who like range trading, I think it's a great cross to trade. We do have some kind of monetary policy divergence. It's not Euro-Swiss that they're moving together in tandem. There are differences, there are movements here, but the pips are not extreme, and there are opportunities for getting good pips in range trading. So if you're into range trading, I think this is a good pair to look at. Let's move to Euro Yen. We're seeing less movements in this pair because it's now both currencies are sort of safe haven ones. So lines to look at here are just 134, which worked as support earlier this week, and on the top side we have 134.90. The range also here is it's also not that bad for range trading. I find it sort of less attractive than Euro Pound, but it's still you can see it does respect this resistance line. Well, you can point it at 135, and it does. It's not a bad cross to trade. I know that there's another yen cross which is much more popular. Anyway, so resistance it went just around 135, support 134, and further support at 133.20. If we do have indeed more easing in Japan, then we can see the pair rise higher because the euro has a bit more appeal at the moment. Thanks, Vedran. Please comment pound yen. Of course, that's what I'm alluded to before. The Gepi, that's a popular currency pair. I mentioned a few days ago that it's for those of you who like lots of pips, and it moves very fast. And we have here very round levels as well. So I guess I see the pair. Now it's on the rise, and I think it's justified because if the Fed raises rates, indeed the Bank of England is next, and the Bank of Japan might be set for more easing after these inflation figures. So we have 181.50 as a support, and currently 184. And further resistance, let me add this line, is at 184.77, and much stronger resistance at 187.30. More in the shorter end of this range, we have 182.87, and if we look a bit more in detail to the upside, we have here a nice round number of 186. So these are the levels that I'm looking at. I believe that we'll have some movement, a bit more movement to the upside. This might come a bit later on towards the real decision of the Bank of Japan, but this is certainly, if Euro Pound is more for people who like less pips, range trading, here we have much more trendy moves. The trends are strong. There are lots of pips, but please, if you're trading this pair, use less leverage because there is more risk, of course. The movements are stronger. Is there any other currency you would like me to comment on, or another question from you, Vedran? Verdan, sorry. Oh, no, Vedran. Okay. Anyway, let's go back while we wait for more questions, maybe more currencies. Let's take a sneak peek going on at what we have for us next week. So the big event next week is non-farm payrolls on Friday, of course, as always, the first Friday of the month. I don't have the current expectations, but I can tell you in general that if we see over 200,000, the same solid job gains, it's good for the US dollar, it supports a rate hike in December, all is good. If we have another disappointing figure like last month, 173 we had last month, but so if we have in general 200,000 or lower, it's of course bad news. We're also expecting a revision of August number to the upside, because that's quite common for August. We'll have, of course, a much more detailed preview next week towards the event. But these are the things to watch out for. Apart from the headline figure, we're looking at wages. And wages are still rising too slow, 2.2 year over year, and we need to see some improvement in that as well. You're welcome. So other figures next week, we have inflation data from Europe. We have first from Germany, and then for the whole Eurozone. We had a weakening of inflation data in the final read for August, 0.1 and 0.9, and in headline inflation and core inflation. We're expecting, I guess, more of the same, but we need to see it rise in order for the ECB not to print more money. I think there is bias, a tendency for printing more euros, but we have to see inflation numbers. They will, of course, impact how ECB members speak. They speak a lot. Not everybody has the same impact. Of course, Mario Draghi, the president, has the biggest impact. So we have that along a few days. These are flash figures for September. We have also figures, I said, in Germany, and we have also in Spain. Spain had one of the worst deflation levels, and so that's also something to watch. Another important figure, we have ADP non-farm payrolls, ADP NFP. That's a private company that manages lots and lots of payrolls in the United States. They have their report for the private sector. It's sort of a warm-up towards the non-farm payrolls. And we have Janet Yellen speaking once again. I hope she's okay physically, and she'll give a good, strong speech. Of course, she has a lot of impact on markets. Another thing worth mentioning, this weekend, where I'm sitting here in Barcelona, in Catalonia, in the northeast of Spain, we have regional elections. Now, you may ask, why are regional elections in the Eurozone's fourth largest economy important? Well, they are important because there's a lot at stake. There's a good chance that pro-independence parties will win an absolute majority, and that could, of course, rattle the country. And it has impact that is much broader than only here in Spain. It's a big deal for the whole Eurozone. There was talk about shutting down the banks, which was, of course, denied swiftly. But in general, discontent somewhere in the Eurozone is also reflecting of the economic crisis. So it does matter what result we have and what's the impact and how politicians react. It could have an impact on the euro if it's an outright majority for independence, and the stakes become high from politicians here in Catalonia and politicians in Madrid. Then we might see more movements in markets in the euro. But it's just something to watch. Take it into account. We'll comment on that on Monday. We'll already have the results. Elections here are held on Sunday. Do you have any more questions? Let's look at euro dollar. Not so much. 111.35. Back to the same old range. Anyway, this is, I think I mentioned this before, this is our first week of the morning show. Feedback, questions, everything is really welcome. Do you want more charts, more fundamentals, more of anything, basically? I'll be glad. I'm here to help, here together with me and the team of FX Street, which provides more live shows, of course. So I'll be glad to field your questions. Okay. So let's see if we have another development here on the board. Well, we spoke about dollar yen breaking the trend line. We have, well, on the chart that I drew here, and let's be very cautious, we have a small break, but it's still to be confirmed. We need to see a move much more towards 122 to be certain of that. But as we see, finally, we have a bigger movement in dollar yen. Okay. and euro dollar. Okay, so my chart was not shown. Let's just show dollar yen once again. Here you go. We have it trading now at 120.96. It reached a high of, well, this is the high more or less. We have some kind of break, but still to be confirmed that we have a real move to the upside outside this triangle. Okay. So do you have any more questions? Oh, pound Vedran asks to see the pound yen chart once again. Let's put it on. So, okay, this is a zoomed out 30-minute chart. We have the pair currently at 184.25, rising from the lows. These are the levels to watch out for. Let me take a look at the figures. I can also put this chart on the website, and you can take a deeper look. Another thing to mention is that this program is recorded. You can view it once again if you wish. So anyway, I'll just repeat the levels for you and for others. On the downside, we're looking at 181.50, then 182.87. Then to the top side, 184.77. 186 is a round number. It provided lots of support. Now it can work as resistance. 187.30 and 180.22. Okay. So I think perhaps we can begin to wrap up for today. So let me put the presentation on full screen. Thank you everybody for coming. So this is the live market open for September 25th. It's Friday. It's the end of the week. We had an interesting development overnight. The big event was that we had a speech from Janet Yellen in Boston. She really made the case for a 2015 hike. She was more hawkish than expected, and she sent the US dollar higher across the board, basically reversing the losses of the dollar seen yesterday. Moving back to yesterday, explaining what happened, we had an ECB member from Lithuania repeat more or less what Draghi said. No rush for more QE. That sent, of course, the euro higher. We had important figures from the United States, durable goods orders. They didn't meet expectations. That sent US dollar down because it means a lack of investment in the United States. Then we had new home sales, which came out better than expected. At first, they didn't have a positive impact on the dollar, but eventually the dollar did begin to strengthen much before Yellen's speech had become known, but had become public. So that's a lesson for all of us, that you can still jump on the wagon in some cases. Forex is not only controlled by the machines, by algorithms. Okay. Another development overnight, we had Japanese inflation not going anywhere fast. We're seeing the Japanese yen fall now against the US dollar, against other currencies, and speculation that the Bank of Japan will act perhaps on October 30th. We had monetary data from the ECB. It was okay as expected. The big event of the day today at 12:30 GMT is the final US GDP read for Q2. We're expecting a confirmation of the 3.7% annualized growth rate. I believe that if we'll have 4% or higher, we could have a stronger US dollar. It'll sort of provide the final note for the week. If we have 3% or lower, it'll be worse. It'll be bad for the US dollar, of course. We have a speech by James Bullard. He's a hawk. If he talks about raising the rates, it's not news. If he shows hesitation, then it's news. It could hurt the US dollar. And we have final US consumer sentiment. It's more or less expected to be confirmed, maybe a small improvement. Usually the preliminary number has much more impact. Okay, let's just take a quick look at the charts for today. Euro dollar is, well, now ticking a bit higher within the range, but basically we had it move all the way almost to 113 and now sort of back to the drawing board, back to where we've been yesterday. A lot depends now on US GDP. Pound dollar is above the lows. I believe it can run a bit stronger on expectations that the Fed will hike and the Bank of England will follow. Dollar yen reached a high of 120.97. It's around these levels now. Still no confirmation, full confirmation of the breakout, but there are more expectations that the Bank of Japan will ease. Dollar CAD, the Canadian dollar is vulnerable. Yesterday it made a big move to the upside above 134, the lowest since 2004. Now it looks a bit better, but watch out for oil prices. Australian dollar hugging the 70 level. Goldman Sachs said that the RBA is uneasy about Australian growth, but no big reaction so far. Depends a lot more on China. New Zealand dollar is doing a bit better, above support at 63.10. So these are the major pairs I'm following. I think US GDP could have a big impact, especially if there is a different number at the beginning, if it's not 3 point something, but actually 4 point something or 2 point something. Anyway, I want to thank FX Street for hosting this show. It's a new morning show. We began this this week, and we hope to see you next week. Comments, questions, suggestions, changes, good feedback, negative feedback, anything is welcome. So thank you very much, everybody, for coming. You can see a recorded version of the show and the wrap-up, and see you soon. Have a great end of the trading week and a great weekend. This is Yohay Elam, Forex Crunch for FX Street. Have a great week.